Hey everyone, welcome back to another episode of Questions with Matt and Mark. This week, Matt, I'm going to ask you first.
All right.
So we got news that the Biden administration is going to nominate Jerome Powell again, who is the head of the Federal Reserve, for a second term.
Yes.
And there was a tweet out there that said Jerome Powell getting a second term, stocks to the moon. So does that mean that, another term for Jerome Powell at the head of the Fed is going to be good for stocks? There are people that are saying he needs to get inflation under control. And can you just talk a little bit about how inflation, if that gets out of control, how that could affect the stock market?
Yeah, I think there's two questions there. So viewers, the first question is, the market likes transparency. And I think the market likes predictability. And I think that Jerome Powell, leading the Fed, is providing both of those things for the market. He has been telegraphing movements. People know what to expect out of him. And so I think a friendly face at the leading the Fed is a positive thing for the markets. Mm-hmm. Now, secondarily, Mark asked a good question about inflation. And ultimately, the Fed does have multiple tools in its toolbox. One thing it's doing right now behind the scenes, and Mark, you know this, is they're lowering the amount of money that they're printing in this system. So they're lowering something called quantitative easing. Fancy term, they're starting to print less money. And that's currently at a rate of $10 billion a month. If they continue at this pace, they'll no longer be adding printed money into the system by next summer, is what they're on target to have. Now that's tool number one. The other tool they're going to play with, of course, is interest rates. And there's a lot of discussion, Mark, and debates about when the Fed's going to eventually raise interest rates again. I think the base case for Wall Street, second half of next year at some time, and I think most people are expecting that. And again, that's been telegraphed to the market by Jerome Powell and the Fed, and they've done a very good job with that. Mm-hmm. Good way of answering it?
Yeah, it is. And I think, people are excited just because under Jerome Powell's term, the stock market's done pretty well so far.
Yes, he's been very friendly for Wall Street.
Right.
Has not caught them by surprise.
Yeah, and I just want to throw it out there, too. Just because we're getting inflation, that doesn't mean that stocks can't perform well going forward.
No.
Right? I think people get scared or get the misconception that, inflation is going to kill the stock market. I really don't think that's the case because we're at historically low interest rates.
Yep.
So even if rates rise by 2 or 3%, in my opinion, long term, that's not going to have a large negative effect on the stock market.
No, think of it this way. I'd be more concerned if I had a ton of cash on the sidelines right now because that's what's really eroding my purchasing power.
Right, and that's the concern in the first place is that if your cash is at the bank and it's not growing, then obviously it's not going to keep up with the inflation that we're having right now. And just a reminder to people, we invest in the first place to protect our purchasing power for times like these when we have inflation.
That's right.
So this is the whole reason we invest in the first place. So I would say keep doing what you're doing.
What I say in our podcast, the Independent Advisors podcast, I always say inflation's a silent killer.
It is. It is.
All right, here's what I got for you this week. Jenna, our marketing director, is going to overlay a chart right now as I speak, and it has to do with bespoke investments research analysis on returns of the market, Mark, during Thanksgiving week. And historically, they're always so good. Mm-hmm. And the chart's going to show it since 1945 and then a shorter time period. Just your comments, again, on seasonality, where we're at with the calendar, and just some thoughts as to why that might be.
Yeah, and I think, everyone always gets so caught up in the why for everything, right?
Yeah.
And to be completely honest, I can give you my opinion, but that might not be the reason why Thanksgiving tends to be a good week. My initial analysis is that just like during the summer, it's a shortened trading week.
It is.
People are with family, they're visiting with friends, they're not necessarily working a full week. So trading volumes tend to decrease.
That's correct.
And
that's a fact. That's a fact.
When we have lower volatility, that's usually pretty good for stocks, right?
Yep.
So just going back and looking at history, the week of Thanksgiving has been a positive week usually, but as to the exact reason why, it's really anybody's guess. All you need to know is typically there's not a lot going on during the week and you can expect a pretty muted week. But the other thing to note is that we are, again, in a very seasonally strong period of the market from November through the end of the year. So going forward, I think Matt and I are going to have some interesting stats to provide with how the market finishes the end of the year, starts the beginning year, and we'll go over something called the January effect that could lead to a little bit of a tipping point of what we could expect next year for market returns.
Love it. All right, listeners, join us next week for another episode of Questions with Matt and Mark. We will see you then.